Bismillah ar-Rahman ar-Rahim. Alhamdulillah Rabbil Alameen. Wa sallallahu wa sallam ala Sayyidina Muhammad wa ala alihi wa sahbihi ajma'in. Amma ba'd. Respected brothers and sisters and elders, welcome to this, I would say, the final session on the Zakat series and the Zakat course that we've been delivering on TAIF with NZF Worldwide. First of all, I'd like to thank all of you for taking part in this tremendous journey over the month of Ramadan, where we've been learning about zakat more and engaging with this pillar of Islam. As we mentioned in the first sessions, how important it is for us to engage with our tradition, our heritage, our roots greater, and to really understand and unlock what these pillars are about. I always tell friends and colleagues that zakat is not just something that we pay, right? Unfortunately, it's been relegated to just a payment from the payer's perspective. But there's so much in the supply chain and the value chain of zakat. The value chain of zakat has so much more to it. And we don't see that, we don't feel it, we don't deal with it, neither do we experience it. And therefore, we need to understand the pillar holistically, that what difference it makes in our lives, first and foremost, for the economy, for the beneficiaries, payers, recipients, society. It's a transformational act. And every pillar of Islam is transformational, not just zakat. Every pillar of Islam is transformational. Zakat has a beautiful kind of dimension to it where it's there to bring stability in the economy. I mean, the things that zakat does for the economy it's amazing, right? I mean, a very simple, just breaking it down without going further into economics, but just to understand that what makes an economy run, it's consumer spending at the heart of it. That's why whenever quantitative easing is done, change of interest rates, it's all about trying to fluctuate spending. And zakat, what is zakat? Zakat is cash flow, right? So it's one person's expense and another person's income, and that is the core of the economy. If you were to break the economy down, what will the economy be? Transactions. An economy is made up of millions of transactions, and zakat is also a transaction for the beneficiary when he eventually uses zakat money to buy his needs. So you're injecting liquidity in the markets through this amazing instrument. And of course, beyond that, beyond just the material gain for the economy, the greatest thing about zakat is it's a means of us recognizing Allah and connecting to Allah. It brings within the markets, within the economy, within the society, a recognition of Allah. And that is the key to success. That is all that matters. And that's what the pillars of Islam do. So every pillar of Islam, they facilitate the recognition of Allah at a different level and degree, right? So whether we use zakat as on a, you could say, an analog non-digital platform, or whether it's digitized, it'll always have benefits, right? But what we're trying to optimize here in these discussions, how can we optimize zakat? How can you optimize zakat management? How can you optimize delivery and impact measurement? And that's what we'll be looking at in this session. So in this session, we're looking at, first of all, what is fintech? I just want to quickly brush over that. So we're all aligned on what we're talking about, right? Number two, let's then look at the main discussion in terms of zakat and fintech. It's to do with blockchain, really, blockchain adoption within fintech. I will look at the challenges of blockchain adoption and then look at a case study, right? Now, when we look at what is fintech, right? The word fintech, it's composed of two words, finance and technology. Now, when you ask anybody what is fintech, many people have a very blurred understanding, and that's because, look, majority of banks today are using technology. They have mobile apps, they have websites, they have a robot advisors, right? So you have these automated chats and these bots. So is that fintech? Is that what we're referring to? Because if that's the case, then it's already being massively adopted by everybody. But that's not really what we're talking about. When we talk about fintech, the word fintech doesn't mean that. That's just digitization of services, right? When we talk about fintech, it's something more than that. And this is what we need to explore. Okay. Some basic definitions of fintech, as you can see on your screen, if you look at the Oxford Dictionary, it's computer programs and other technology used to support or enable banking and financial services. Of course, you know what finance and technology mean, no need to go into that. But the word fintech is used, as you can see, in two ways, right? There's two working definitions. One is it refers to the activity itself, right? So money management, such as investments, lending, money movements through digital applications and processes. Fintech is also used as a noun to describe companies leveraging innovative, disruptive, and pioneering uh, methods. Right? So fintech is also used to describe companies as well as describe services. Okay, but what I want to do is I want to kind of break it down further. And there's a model which was developed by the fintech circle, which I think really hits the heart of the matter and addresses fintech in a completely different way, which is the way to understand fintech. For clarity, is the fintech cube. I've written on this in my book, Introduction to Islamic Fintech, further and described what this means. But if you look at the fintech cube, there's three axes. You have the business model, you have technology, and you have the financial sector. For something to be a fintech, all three axes have to be satisfied and have to be met. So, for example, if we take the financial sector, one axis, any fintech must be working within these areas. For something to be considered a fintech, it must be within these areas, right? Generally speaking, right? These are majority. Of course, they're not put in zakat because the fintech circle is not a faith-based organization. But we could put in zakat and waqf management and Islamic social finance in there. So look, for a fintech to be a fintech, for any kind of model to be fintech, it has to be either in retail banking, SME banking, commercial banking, corporate banking, trading, asset management, so on and so forth. We can add therein takaful, Islamic finance, Islamic social finance, and the list goes on. But this is the first criterion for a company to be deemed a fintech. The second criterion is the business model. This is one of the key things, right? The key things which makes this different, right? It's what makes a fintech company different is the business model. Generally, when you have certain business models, they are not aligned with these models, right? So the more kind of traditional services that we're receiving, they might not all be aligned or fall within these categories. But generally, you'll see fintechs being platforms, crowdfunding, peer-to-peer. What that does is cost efficiencies, is a greater economies of scale, greater reach. It really just decentralizes the entire engagement with something, right? So that you're breaking the kind of uh, intermediary, you could say, model that we've had for so many decades. So you're that disengagement, that is intermediary. That's what's happening here. We're removing intermediaries out from the equation. So this is another key area of fintech is the business model, where it will change the way the business and operates. And then finally, of course, one of the key signs of fintech is when it's financial sector, when it's in the financial sector, its business model is correct, which aligns with fintech companies. Number three, the technology. You'll see a heavy emphasis on cloud computing, big data, AI, blockchain, Internet of Things, and of course, virtual reality. But when you put all these three things together, what you have are firms which are purely existing on a cloud or existing online. They have very little physical existence, meaning there'll be no physical building. Um, and I would say one of the hallmarks of a fintech company is that it uses what we call a plug and play model. Right? That's probably I would say one of the key features to recognize a fintech. It's a plug and play model where majority of its services are delivered by third parties. Many of these fintech companies, um, they have very little in-house, you could say, infrastructure to deliver the service. Rather, they're being supported by multiple third parties which are operating on a cloud, right? So they're all cloud-based, what we call SaaS services, right? Software as a service. There's platform as a service, software as a service, infrastructure as a service, and this is what these companies are leveraging. They're leveraging what we call SaaS, everything as a service, right? It's spelled with an X, everything as a service, where all their services are really leveraged through third parties. They're doing everything in the back end, but the front end is this kind of company. So although for the user and customer, it seems like I am gaining all these services from this one company, but really it's just a white label for multiple companies and services under the bonnet, offering multiple utility and benefits to this one company. And that's how majority of fintechs are operating, through this plug and play model, which is very common. You'll find very little in the actual core team, very little or very few. uh, One is staff, and secondly, in-house infrastructure and services. Of course, there's huge cost benefits to that, because if you think about traditional banking and traditional modus operandi, traditional models all have internal IT teams, tech teams, internal storage of hardware, software, internal maintenance, internal compliance, internal account. Everything's internal, meaning it's part of the business. So you have a huge team with all these departments. What that does is, of course, costs will rise, because you have the direct costs, right? Labor, as we know in accounting, those who are accountants, direct costs, what? Labor, materials, right? They're one of the two most direct costs that you have, right? It's paying staff their wages and the materials that you have. So these are costs which are directly impacting this business, or this bank, or whoever it may be. Now, if you strip yourself of all of that and you outsource everything, you don't have to pay the same wages for salary, because now you're just paying for services, and within that is a contractor fee. So you're making a saving there. You don't have to pay for the fixed assets, the management of the fixed assets, compliance, upgrading, maintenance. All of this you don't have to do, right? It's all removed. So all that materials and all that development, maintenance is also removed. Rather, what you do is you just get a subscription. You can buy a subscription. You can have all your data stored in the cloud. This third party provider, this third party, if you're using Amazon's AWS, you're using other services, they'll take care of all the kind of infrastructure. But all you have to do is focus on delivery, right? Delivering a product. And that's what changes. So you're using this, what we call a plug and play, what I like to call plug and play, where you're just plugging in all these different back-end services, and you're just playing your kind of service to your market and to your customers. So you see the dynamics have changed completely, and that's what we're talking about when we talk about fintech, and that's what's referred to when we're talking about fintech disrupting, and we talk about these new startups and new tech companies which are starting literally on the cloud with a few people. They're doing a Series A, Series B fundraise, and they're really, making innovative changes in the market. So that is what is fintech, and this is what we want to focus on. So just two examples, right? A wealth tech company that sells its software to hedge funds, right? Of course, hedge funds are not Sharia compliant, but this is purely as an example. You could describe it as being focused on asset management. So it has X-axis, B2B business model, and using several types of technology from the Z-axis in combination. So like a wealth tech company would be a fintech, could classify as a fintech, or a retail banking solution focused on business models of B2C and using various technologies such as cloud, big data and analytics, and AI. Such a company would be called a challenger bank, sometimes also referred as a digital bank or a neobank, right? Remember, this is a whole other discussion. I've talked about this. I'm sure it's on YouTube as well, um, where I've discussed neobanking with TAIF. We had a seminar a while back. You can check that out, inshallah, where I discuss this further. Now, is blockchain always beneficial? And the reason I want to talk about this is because when you talk about zakat, what people straight away understand and think that blockchain is the best thing since sliced bread, that blockchain is and will solve all problems. Personally, I'm not such a big believer of that. um, Blockchain does have its advantages, it also has its downfalls, and you'll see why I'm saying that. So what is blockchain? Very basic and very simply, right? And I think we've also done a session on this. So whoever wants to know more about blockchain can watch the series that we've done on TAIF through the fintech course. There's a course that we've released, which you can sign up for, which is like an introduction to fintech. It's like a diploma in Islamic fintech, and in there we discuss in detail blockchain, neobanking, crypto assets, and the full works of fintech, what fintech is, crowdfunding, and so on and so forth. But blockchain, as a very basic definition, is an incorruptible digital ledger. That's what it is. It's a record keeping mechanism, right? Which is decentralized. To be honest, blockchain can be also privatized. You can have a blockchain for a particular company, or it can be a public or private blockchain, right? So blockchain is not always decentralized in that sense, right? It can also be controlled and centralized for a particular company, and they can manage everything. So this is not always controlled by multiple parties which are unknown to one another. It can be controlled by a single entity. But the benefit of blockchain is, of course, the data is immutable. It cannot be edited thereafter. It cannot be corrupted. It gives access to multiple parties at one single time in real time to a supply chain that you're dealing with. The data is time stamped. It's not clustered on a single computer, which again creates further robustness in the data. And the cryptographic principles of which are really unique, which further enhance security for data on the blockchain. Now, at a basic level, this might not sound wow, but when you think about it at a company which has $1 billion assets, right, under AUM, assets under management, right, or you think about charities, or you think about compliance, you can make a huge change in the way compliance is managed, security, because one of the areas which are very costly for companies, security and compliance. That's a huge function within any institution. And so compliance with regulations, security, for example, in the UK we have GDPR, which is to do with data protection, data security. The data and securing data. This data is like the you could say as the goal of this time, right? Data is traded. Data has so much value, right? Something which is so valuable, and it's almost a commodity in and of itself nowadays. So when data is so valuable and there's so much regulations about data, you can imagine that the efforts that go into then preserving and protecting data, right? Yes, data is everything, especially digital data. So it's important, therefore, to have services and systems within a firm which are protecting that data. And if you think about Zakat organization, they have data which is to do with Zakat payers, Zakat recipients, third party arrangements. I mean, if there was a data leak of an institution, it would be going against regulations. It can effectively come, depending on the leak of the data, it can even be a means of shutting down the institution altogether, depending how great the leak is and how big of the issue is, right? And that's why audits are done, and companies are have to, like in the UK, we have the ICO, the Information Commissions Office, if I'm not mistaken, which now manage this whole area. So data is a very, very important area for companies. Well, the question is, look, when does blockchain make sense? And this is where I would not, like, my personal view I like to share is blockchain is not always beneficial. It makes sense when if your company, number one, is dependent on a third party for all its operations, right? That's where potentially there's a benefit of blockchain. There's a very good, I forgot who's made this, but there's a very good kind of flow chart, which if you follow through, it breaks blockchain adoption down very well. And you can see when it actually makes sense. So it takes you through a number of phases, this process and its flowchart. Inshallah, if I find it, I'll share it in my social media just for everyone's benefit to see. But it really breaks down when blockchain makes sense. And I mean, I think it even might be in the TAIF course, those who've taken it, and I can't recall on top of my head. But I'm sure it potentially is in the diploma on Islamic Fintech that we've released with TAIF. But another thing is the third party burning a hole through your pocket, right? Is this really like heavy on funds? Okay. Do you need to have a clear audit trail for your company to make sure that everything is in its place? So your audit trail, is that required? These are the questions that a company would ask itself when it's thinking about blockchain. Further, For a zakat institution, it needs to think about corruption. How much is corruption a risk or a concern? Is there a medium to high risk of corruption? Does the zakat institution have weak governance frameworks? And I say this because not every country has the same level of governance, right? In certain jurisdictions have weaker governance in certain areas. Is the financial infrastructure in the country of operations effective and efficient? Are there multiple parties involved with a lack of accountability and oversight? Now, if this is the case, look, you have an institution which has a concern of corruption. Corruption is known, unfortunately, as wrong as it is, but in certain parts of the world, there's more corruption, and of course, that's partly due to weaker governance frameworks. There's more reliance on cash transactions. There's less digitization. Further, the zakat institution itself. How is its governance model and framework? Is the financial infrastructure in that country of operations effective and efficient? What's the financial infrastructure like? Are there well-established banks? Are there well-established controls, regulations overseeing those banks? What's the cash controls like? What are the uh, mechanism of payments? How can you make payments? Uh, all these kinds of issues matter when you're considering a question of blockchain adoption, because this is your legacy system. What we're talking about now, we're comparing legacy based systems against fintech based systems, or blockchain based systems, right? The legacy based systems, for example, in the UK, I don't see any personal wow factor in having a blockchain used for many companies right now, because the cost potential will be higher, because an expert on blockchain, their fees would be astronomical, because it's such a niche area. Until we don't reach a critical mass of understanding of what blockchain is, how fintech operates, how blockchain would integrate within traditional services, the costs of playing with this area or even trying to meddle with this area are huge. So you might just do like a side project just for the sake of being innovative in testing. But really, right now, the legacy based systems that we have in the UK are very efficient. Right? The legacy based systems that we have in the UK are excellent. I personally don't believe that we need to adopt blockchain for zakat institutions. It's not required, because there's a strong governance framework. Uh, as a result, corruption is reduced. Um, very strong audits, financial infrastructure, one of the best in the world, and therefore, alhamdulillah, blockchain is just not one of those things which are, I mean, will add immediate value in the short term. Yeah, in the long term, we can see potential growth, and we can see how blockchain can potentially add value, but in the short to medium term, potentially not. The current systems, and of course, if an institution is working internationally, then you can look at it differently. But because we're looking at it from the lens of a company like National Zakat Foundation in the UK, there's no need for, I think, from an NZF perspective, there's no need to have that, because the robustness and effectiveness that's developed already is excellent. And I mean, when you're looking at technology as an example, so those of you who haven't seen the nzf.org.uk website, one of the things that the NZF team have developed is what we call a zakat tracker. This is like one of the most amazing advancements I would say, in the area of zakat internationally, where this tracker will tell you when your zakat payment is delivered, and you'll get a notification where your money went and who it helped, right? Which is, of course, it won't go down to telling you the name of the people, but it'll tell you that if you've helped a family with a grant, with this payment of whatever, and they were struggling, or hardship, or they needed accommodation, or whatever it may have been. But to that level and degree, it's completely changed the transparency of zakat management, right? So the zakat tracker is an amazing tool that's been created, which can be, if you're interested in seeing that, you can go on the NZF website and look into that. And not only that, then there's notifications on this that you'll receive in real time when that's done. So that just shows you, right? In terms of tracking zakat, you can do this already. A second thing is the kind of intuitive, as well as um, engaging calculator that's been created, that's been coded, integrated with some of the latest um, research, right? So you don't need to have the most fancy or the latest innovative structures like or infrastructure like blockchain to make groundbreaking changes. That's all in the market. You don't need that. You can make multiple changes. You can have really good impact with the legacy-based system that we have. But there's always room for improvement, and of course, there's always room for developing further. But Alhamdulillah, I mean, the legacy-based system is quite robust. So, what are some of the potential benefits of blockchain, right, that we can explore, and then how does it tie in with zakat, right? So, number one of the and these are all argued, right? I mean, it's still yet to be demonstrated, but it's argued that zakat payments on a blockchain has the potential to exchange value at higher speeds. So if you look at VisaNet claims it can process 56,000 electronic transaction messages per second. Now, there's blockchains out there which have been created which argue that they can do more than that. They can process faster and more transactions per second, right? But of course, there are multiple blockchains where scalability is an issue right now. Scalability is an issue, but this is one of the areas which blockchain developers are trying to solve, right? Blockchain developers are trying to solve this and trying to say that no, we can develop systems whereby the transactions per second are faster and greater than the legacy based system. So your VisaNet, your PayPal, and all these different companies which process transactions, they are vying and competing with them. Another argued cost is reduced operational costs, right? And so proponents and supporters of blockchain technology argue that blockchain has the potential to reduce operational costs. How? Two ways, right? One is lack of intermediaries. Of course, as you know, on a blockchain, you can and this does happen, reduce intermediaries altogether. So you don't need to have a potential third party service provider in another country where you can connect directly with the recipients. So of course you've removed the supply chain has been reduced, and whenever a supply chain is reduced, of course that follows that operational costs are reduced. Number two, smart contracts can reduce administrative costs for charities. So smart contracts is a whole other area which it's now gaining traction, but there's a lot of regulatory. I mean, it's not a smart contract. Don't think of it as a contract. And I've written on this in detail. You can find some of the writings I've written, and even in the TAIF course, we've discussed this. It's really just a program of execution. A smart contract still requires drawing up of a contract. It still requires parties' agreement. It still requires, well, now at present anyway, you still need like a lawyer or a legal team coding it. I mean, one is creating the legal document, and then it is coding that in. So arguably, you probably have double cost because to use expertise in developing the smart contract and then to get legal work done will increase the costs, right? So it's argued right now the benefits of smart contracts are not crystal clear, but this whole area of smart contract development is still developing. I mean, there's been some work in the GCC on Sukuk and smart contracts. There's been some work in um, ownership, how ownership is transferred and ownership title, legal title to property on smart contracts. So it's the execution of contracts where that can be automated with using smart contracts, which is really the key. But you still would need to have contract development. You can't reduce and you can't remove the necessity of having contracts drawn up in the first place. All those contracts will be put into you could say, into the infrastructure and the system, and then it would be executed based upon certain conditions being met, and that's when funds will be released, transfer, and the title is transferred over to the parties. Number three, greater transparency. So another argued benefit of blockchain is transparency, of course, which everybody talks about, and transparency is one of the key when it comes to zakat and when it comes to charity. Transparency is one of the key features. If you are not transparent in your operations, then the entire kind of governance framework is weak. You have to have transparency in what you're doing. and have reporting mechanisms to your donors and to your contributors. I mean, in the UK, look at the statistic. Fraud in the charity sector costs British charities and charitable trusts approximately 1.65 billion per year. So that's like not disclosing or um, multiple reasons for this, right? There's a research on what exactly this means and how um, the word fraud is a very broad term here, right? But it incorporates multiple areas. But 1.65 billion per year, and of course, a lot of it to do with tax, right? Tax evasion. That's generally a lot of it is how um, charitable trusts are used to kind of minimize and mitigate tax altogether, which is a whole different area. Another potential argued benefit is blockchain will allow track and trace, which is of course quite obvious. But in a blockchain, you have a view of what's happening, which is not necessarily the case when you have legacy-based systems. You're reliant on third parties to kind of disclose information to you. So that's one of the benefits of blockchain. Stronger governance, again, it's argued. Of course, if you have transparency, you have stronger governance. Payment zakat pays a visibility of zakat movement. So if you were to create a blockchain for zakat management and have payers have access to this trail, they could have a clear view of what's happening. Auditors can have a clear trace and ensure what's happening with the cash flows, and management have a greater visibility also. So it creates greater visibility, a greater audit trail, transparency, and all of that results in stronger governance, which is, of course, one of the key areas for efficiency and growth. Smart contracts for applications, we just touched upon this. But what are the smart contracts? What can they do? As we mentioned, automation of processes by use of smart contracts can reduce administrative costs for charities. So there's a lot of admin costs, as you know, in charities. So if you can reduce admin costs by automating many processes, that will bring savings, and you can have greater focus in other areas of the charity. Further, when an applicant inputs all the correct data, funds can be released automatically. So, for example, in the UK, where we have, for example, the National Zakat Foundation, which assists local people who are in need locally, if an applicant puts their information in, that information and data will now be screened and reviewed by grant officers to see if they meet the needs. Already, alhamdulillah, though, NZF, what there is an automatic kind of mechanism where it's screened. There's a screening mechanism that's done automatically. So we have what we call like an applicant checker, an eligibility checker. This is a new kind of tool that's also been released, where a person can go in within a couple of minutes. You can know whether you're eligible or not. Just like how you can apply for an Islamic mortgage or a mortgage, you can have an agreement in principle by just filling out some data and information. Similarly, the whole zakat process we're trying to streamline as much as possible, and um, you can now go and check whether you're eligible. So that check is done for you automatically. But of course, for robustness, to create, because it's zakat that we're talking about, we need to have further screening to ensure that there is no weaknesses or any kind of risks. So therefore, we have human review of the cases as well, which are then further reviewed as well by the teams. So this process is already there, but you can automate many of these processes, and you can also release funds quicker. And of course, then you're scaling your operations, which have a huge impact upon the ability to turn over and ability to manage the cash flows and meet the needs of people in real time. So there's less lag between income and output, right? Or zakat payments and zakat delivery. We're trying to reduce that gap altogether, and that can happen through these kinds of processes. What are some of the challenges, though? Okay, those were like the benefits and argued kind of potential. But what are some of the challenges that are foreseen in this space? Lack of knowledge and human resource, which I mentioned. A lack of awareness of technology is one of the key. I mean, To be honest, in all areas, human capital is potentially the largest barrier in human resources. We don't have experts in areas that we need experts. I mean, we have many people who are um, well versed. What we need is we need specialized individuals in areas. And this, I'm a big fan of this and big proponent of this. I believe that each individual needs to specialize in one area and serve that area, right? And then study that area properly, and then be of service to humanity through that area. And that happens. Look at a doctor. A doctor will specialize. They'll specialize in a certain area because the body is so complex. You can't just have a specialist for all areas. You have a specialist for the heart, for the brain, for the eye, right? Allah has created the body is an amazing creation, right? Which is we can talk about the body all day and how Allah's artistry and His might and His creation, how great it is. But it needs, I mean, that just shows you how complex Allah's creation is that we need to create specialists, spend hundreds and millions of pounds just trying to understand one area of that body. That shows you how valuable each organ and limb is. Because if you're spending millions and billions of pounds training individuals to try and break down and try to understand this one organ and limb, that shows the value of that organ and limb and the complexity that exists. And don't only think about those who are delivering on the front line, so the kind of doctors and neurosurgeons who are actually doing operations, but the kind of knowledge and research in the back end that takes place to feed in that data and support. It's the whole supply chain again and the value chain behind each limb. So look, we've specialized in that area. We also need that kind of specialization in the Islamic areas where we need specialists in, um, for example, in Salah. I mean, Salah is, you might think Salah is a simple area and prayer is very easy, but no, we need specialists in prayer. We need scholars and jurists who are specialists in prayer, scholars and jurists who are specialists in medical areas. We need scholars, jurists who are specialists in food, right? And food sciences because it's very complex. We need specialists in finance. We need specialists in even within finance further. We need specialists in zakat. We need specialists in every area. So never think that your profession cannot help Islam and cannot help the Muslims. Of course it can. Many of you might have different backgrounds. Some of you might be tech experts or techies. Some of you might be financial expertise. Some of you might be doctors. Your knowledge will always be of benefit to scholars. It's a teamwork. It's never a matter of we all need to work together to have the best impact. I mean, management is another skill and another area of experience, right? Which we need to develop, and it's working with the right people and teamwork has the greatest effect and greatest output. So whoever has this knowledge and expertise, it's about pooling. You might not have all the answers, but somebody else will have the answers. So it's about working together and trying to have the best outcome and solution. And that's what's needed in here as well, right? Lack of cooperation. Look, and this is exactly what I'm talking about, right? Cooperation amongst institutions. This is an issue because when you don't have cooperation, the whole point of these ledgers is multiple parties coming together and working. But if that's the case is these multiple third parties are not working together, they don't want to be on one platform together, then the kind of pain points each one is experiencing is not going to be resolved. Your pain points will only be resolved when you all come together on one platform. Until then, it's not going to, blockchain will not make huge difference because you need everybody on the supply chain agreeing to come on board. Culture shifting dynamics, which is of course a huge barrier in blockchain, is it represents a paradigm shift. When we incorporate blockchain in any zakat institution, it's going to create a huge shift in the way things are done. There will be a paradigm shift. That means you need to train. You need to the loss of control can be deeply unsettling. You need to get people engaged, trained, experienced, win them over, right? So there's a lot of challenges in that, and that can upset an entire institution. And an institution right now, because working capital is so limited, an institution has generally they have very little working capital, so meaning the visibility is only like 1 month or less than a month. When there's no cash flows or there's an interruption and it affects the kind of operations of a company and a business, it can really impact their balance sheet, right? Their cash flow statements and their income statement, right? The entire financial statements can change by the end of the quarter or by the end of the financial year. And that's why these things can create huge shifts, which not every company wants to implement. And that's why it's always good to potentially incubate these within a company, test it, trial it in there, and then gradually adopt it, right? Which is what larger companies do. That they have an area where they incubate, almost like what we have, like a sandbox in the financial services. We have a sandbox. A company can go within a sandbox, get the technical support, test, trial, and test, pilot, and then launch for the mass market. This is what we're talking about here as well. Same thing. Number 4, speed and effectiveness, which is key. One of the problems is they can potentially higher aggregate costs when you look at trying to deploy this. And then the node performs the same task as every other node on its own copy of the data, and then they have to be the first to find a solution. So, I mean, this is another challenge, right? We want to be fast, but are there more costs in this? This is a whole area that needs to be seen, as we know, because the amount of energy used by blockchain and by certain applications can be huge, and that can have an adverse impact. That although you've made a saving in one place, you've increased your cost elsewhere in terms of your use of energy. So these are all like pros and cons and trade-offs that need to be considered when trying to adopt blockchain. Finally, I think the 5th point here is issues with the token. Look, if you're going to use a blockchain, you're going to have, if it's data, that's fine. But if you're then going to transfer value, you're going to have to use a token potentially. And when it's a token that's being used, it must be something that's acceptable to merchants. So if you're using a token, you are tokenizing a particular asset. That token should be usable within the ecosystem of the beneficiary. If it's not beneficial in their ecosystem, it's lost all its value. So the idea is transferring value. That's the whole idea of using the blockchain. But if the very thing that you're transferring on a blockchain has no value at the end of the supply chain, then what's the point, right? So potential solution you could create is a network of service providers who are all participants on this blockchain and accept this token as a payment. So this tokenization of whatever it may be can be a methodology of trying to solve this problem. Alternatively, you can have like a bridging asset, which some blockchains do. So their asset is a bridge asset whereby you can convert your fiat into the token, and then at the other side of the spectrum, the beneficiary can convert the bridge asset into their fiat currency. So purely a bridging asset mechanism, which can work, and which I've worked on personally with some institutions. So some areas of Zakat and blockchain as a case study. Where can blockchains, I mean, when we're zooming out and looking at blockchain in general, there are 4 key areas in a Zakat institution where blockchain can help. Number 1 is Zakat payments, which we've been talking about. Zakat management, of course, of visibility, oversight, zooming out, audit trails, governance, the whole lot, right? Zakat distribution, minimize the kind of lag, making it more efficient, the smart contracts we talked about, because also that's all encoded within the blockchain. And then reporting and impact measurement. You can have data in real time, which is really exciting for companies and Zakat institutions today. It's all about transparency and impact measurement and having a good reporting mechanism. So all of that can be done on blockchain. Now, finally, just to finish off with, as we just have 10 minutes left, a case study I want to share is charitable kind of management was done and is done with Binance Charity, BCF, right? Binance Charity Foundation. So they did launch a system whereby they manage charities or donations on the blockchain using tokens. So the BCF accepts both cryptocurrency and fiat with a preference for crypto. It currently accepts 3 tokens, the Binance token, Ethereum, and Bitcoin. And more cryptocurrencies to be added in the future. What happens is the donation is allocated depending on the progress of the projects. The time delay between the donation and distribution to end beneficiaries. For example, the distribution is made after the end beneficiaries are identified. The BCF system cannot send each donor a notice when the fund is distributed. However, all transactions are uploaded to the website, so donors can track the fund and the progress of each project. So that's kind of the chain that's come about with this BCF case study, right? What they're doing, they're trying to create some more transparency using uh, the distribution via crypto and blockchain. So what happens if you break it down? It opens up a cryptocurrency wallet for all beneficiaries. So think about both sides of the spectrum. You're donating into a wallet, and the beneficiaries at the other side have a wallet that they can access. All the funds go directly to them instead via institutions such as NGOs, right? Or INGOs in this case, right? You have international organizations. The end beneficiaries will use the crypto they receive to redeem goods from local suppliers and retailers who are also granted with crypto wallets. So the beneficiary who's received this donation will transfer from their wallet the crypto that they have, the token that they have, to this merchant. This merchant will be selling goods or foods or food stuff, whatever it may be. They'll just transfer into their wallet, just a normal crypto transaction, and that's how it's all managed. So you're now using crypto. I mean, this is more or less, I wouldn't say this is a huge shift because all you're doing is opening up 3 wallets really and just using tokens for donation. So this is not a huge shift. Yeah, one point here, which is all these transactions are recorded, so the public will see the entire flow on the blockchain. That's where the blockchain comes, but it's still not a huge shift in terms of, um, I would say, mass adoption, right? But it's a very good case study, nevertheless. The BCF website shows every single donation received in every allocation to end beneficiary, and that's of course a key. So now payers can see, governing bodies can see all donations made. It's transparent. There's no kind of hidden payments being made. You can't make those kind of cash in hand payments anymore. It's all monitored if you're using the system. All of them incorporate like an ID, right? A tracking ID, an identification number for a crypto transaction, which allows people to confirm their donation information and verify the transaction on the blockchain. So your payment would have a specific tag on it, right? An ID, which you can see where it's gone to, whose wallet it's gone, and where it was spent, right? To which wallet it was transferred to eventually. So the ID again, that's huge, right? This is huge, right? The first part is transferring cryptos. That's very common. But this is what's huge, where you have this platform and database, which is now visible to all parties, and they can see exactly this TXID is being tagged onto the payments across the value chain, and you can follow through that entire trail. So that really is the end of my presentation.